Hey everybody, Scott Berthel here. Saturday, January 30th, and let's talk some technical analysis. Remember, this is for educational purposes only. All right, let's talk about oil. Uh, CL. Now, this is from May last year to now this year. All right, first thing I wanted to say was this from this high to this low. Okay, we took a measurement of that and we got this here. So from this high down to this low, symmetry is about exactly the same. So we're looking at this 2756, this is at least a temporary low. So that's what we're looking for. And we're looking for a decent, probably retracement up to the 40 level. Um, Basically because the whole move is done. So that's where that comes from. The next thing I wanted to show you was the reaction from the bottom to the top. Okay, so that symmetry, this is from the Fibonacci Queen, learning stuff from her. The Fibonacci, so this is symmetry of this low to this high, is this low, and so we're expecting it to come back up to there. So let me zoom in a little bit for you. Um, so from here to here is this right here. So we're looking for, back up to about 39. So that's there. And then there was another symmetry from earlier in the year. Yeah, right here, from this low to this high. Now, of course, they kept on going, and it also looks real similar from this low to this high. So we're talking symmetry for that, and that brings us up to about 38. So 3750. Now, isn't it interesting that this 3750 corresponds to the high? This is the same chart, daily oil, daily oil. This so same chart, just different timing. But so what we're looking at is we're looking at this trend line. This is giving resistance to it going further up. This green one, as well as this red resistance line. So this can be, and most likely this is if you took from here to here and you retraced it back this way, then this is about between a 68 and a 78% retracement. So that's another Fibonacci line. So there's definite resistance right here. So I wanted to show you that. From this low, timing wise, on the time axis instead of the price axis, if you go from the low to the breakdown, then from this low to where it broke, we're saying it's going to break down again, is right here. So we got till February 10th for this thing to either pop right, or get stalled out and stopped right here and turn back down and then break down again, or it's going to hang out here and then go back up here. Now, so we're looking at February 10th as an important timing date. Now, another thing I wanted to show you, another stuff all over this chart, but um, is the timing. The timing from the low to the high. That's what this line and this line is showing you, is the time, like how many days it takes to get from the low to the high. Well, we've gone timing wise from here to here is the same. That's what from this blue line to this blue line. Okay, so that's that timing there, symmetry wise, and then also this timing from this low to this high is the same, basically the same thing from there to there. So let me go ahead and I'll get rid of these so that people can see a little bit better. But we've basically were sitting on there on Monday. So you see, and if you come in, let's look at this. Same thing as here. Um, but we've got the timing, so it's gone as timing wise. We've hit our high on Thursday now, so I'm thinking Monday and Tuesday uh, is important. But then again, February 10th. So, what does all of this mean? Well, if I had to make a trade, oh, that was the other thing I wanted to show you was you see the volume on this 128 is way up there at 805. Here's the volume right here, and this is the open interest right here, but the volume. Okay, the volume 805,000 shares traded. So on this one, so a ton of people, or all the people that got trapped down here and didn't get out right here because they thought it was going to come down, they had to get out right here, and that's what you're seeing is that capitulation of the people that shorted down here. And then now people don't know which way to go. They tried to push it down, but it came right back up. Sorry, that's a dog talking. Okay. So, if I had to choose, what to do, then I would stay short. That this is a range and that it's going to, 35 is going to hold the top and then it'll come back down. And then we'll have to see whether it breaks down there or not. Now, is that definitely going to happen? I don't know. This is like a 60-40. But the one thing I do see is that my John Eller, his roofing filter, I love. That's the mathematical stuff that I really like. But that was that's a strong reaction compared to this one, and you can see it down here where these lines only get up to 78% back here, and here it went all the way up to 91%. So it's really the momentum going up is definitely stronger. You can see that in this as well as in the price, and then as well as in the volume and the open interest. Look how much open interest, that's an average 600,000 compared to 434,000. So you got a heck of a lot more interested people coming in this way. And the Bollinger Bands, they're coming in. So your volatility of your huge spikes one way or the other, that's coming in slowly but surely. That's what this is saying or showing. And the fact that it got above the blue line of the Bollinger Band, that's positive. It's still weak. It's still in a downtrend. We think that this 35, 08 will hold, but it definitely has a chance to get back up here. And if it closes in here like at 35, 50, 36, then expect it to get back up there to 38. It's just how it works. If it can close in here, then most of the time it'll go back up to there at least. And so again, the open interest is huge, 606 compared to 450. So I mean, what is that? That's 1 1/3 times as many people that have open positions here that are still open versus here. So there's a lot more interest, a lot more people purchased it right in here. That's a really good base versus this. So what usually happens, you get a downtrend, and then that downtrend turns into a trading range. I got that from Al Brooks. I really like his stuff. So expect a trading range, or hammering out a bottom, as they call it. And that trading range can go from 35.12 back down to 28. But that's basically our range right now. It might, like I said, might get back up to here. these are the old symmetries, so expect that this has a chance to get back up to here, and it has a chance to do that through February 10th. If this trend line, if it can break above it, which actually it looks like it has a decent chance of doing, um, this can be a little a triangle. So you got this move up, kind of like it's basically a range, but a descending range. And I can show you that by this. It's basically saying, okay, that this is our range, for there. So expect from here to here to be the range, but I'm thinking it has a decent chance. Now, that's really tough. It's 50-50. It's a really tough call. Now, there's a lot of resistance here, so expect, I guess what I'm saying is expect if it breaks out of here, closes above there, then get back up to there, and then it has a chance to get back up to there before, and there's the timing. Okay, so that's basically it. Thank you so much for watching, and talk to y'all soon.